Welcome to Why PR is Having a Renaissance in the Age of AI. Today, I'm delighted to be joined by Alex Gorokoff, partner at Peregrine Communications. Alex has spent the past decade advising many of the world's leading private fund managers, giving him a front row seat to how PR is evolving as AI reshapes the way firms build trust, visibility, and influence. Alex, thank you for joining us.
Thank you very much, Job. Good to be here. And I think the industry has always been evolving with the times, but I think that what we're seeing today is perhaps the quickest evolution, or even perhaps revolution, at least in my time. So very keen to jump into the intricacies and perhaps try predict what's going to happen next.
Yeah, I'm excited to have you. So let's dive right in. Large language models are trained on LinkedIn, external news sources, media coverage, public web content. That means a firm's earned media presence is now feeding directly into how AI represents them to the world. Is PR having a renaissance, and is the reason AI?
Well, look, I think in a word, the answer is yes. I think there is a renaissance happening, but I think it's perhaps happening in ways that certainly I or others in the industry may not have been able to predict 5 years ago, when these LLMs, AIs were sort of, of course, they were far further down the development line within the tech world, but in terms of being applied to our industry of PR and communications, it was still fairly nascent. But I think the reason for that is the role that earned media and PR is playing in the way firms are coming up in AI algorithms and search engines probably is on a scale which very few would have predicted. I think when the conversation talks about AI being involved in the communications industry, there's a lot of focus put on AI writing press releases, AI pulling together media lists, AI creating website content. But I actually think the renaissance isn't in that domain. It's a lot more about, I heard this phrase the other day, where AI is making public credibility machine readable. And so what that means is credibility previously has very much been a person-to-person human judgment of a firm, but more and more so, given the fact that, according to AIMA, it's almost doubled the number of investment processes that are using AI in terms of screening managers. Whether a GP is credible or not is being more and more influenced by how they come up in AI. And we could talk about where in that process it comes. But the conclusion of this is that firms who perhaps in the past have tried to shield themselves from getting much media coverage have perhaps, or on the other hand, gone very aggressive and gone really widespread, counting almost media coverage by quantity, not quality, are really having to rethink what their strategy is and how they're coming up. And I think for that reason, it really is having a renaissance, because AI is meaning that your reputation is very much built on not just how many times you come up in the media, but how you come up, what words are you associated with. And for that reason, we certainly, as an agency at Peregrine, but this is the case with colleagues all over the industry, have probably had more inquiries from firms for earned media relations in the last 18 months than we'd had in double that amount of time leading up to it.
Yeah, well, I suppose before we really dive into the mechanics, right, can you kind of set that scene when it comes to client conversations? Like, how have they changed in the past, let's say 12 to 18 months? And are investment managers starting to connect the dots between their business objectives and their AI footprint?
I think to answer that question, I'd actually like to take it back a couple of years further, which is just to the post and even during COVID period of time. Because if you look at the conversations, or if I look at the conversations that I was having during that period of time, I think what was really clear was there was a huge, huge focus on owned and digital content, because with people working from home, screen time going up, LinkedIn, you and I know this, we've spoken about it a lot. There's been a boom in the amount of time people use LinkedIn almost as a social platform as much as a professional platform. Firms were responding to that accordingly. And so a lot of the conversations we were having in 21, 22, 23, whilst earned media continued to be important, the fastest growing segment was very much digital content, digital campaigns. And I think that the reason for that was a sheer kind of reaction to the user patterns of LPs, people who work at firms who you're looking to target. The conversation on that has remained steady. So people are still prioritizing digital content. However, on the earned media side, that over the past 12 to 18 months has really changed. And I think the reason for that is the conversation has very much moved from not just how do we get coverage in the publications we're focusing on, but how are we actually showing up in these publications? And I remember, I think, 10 years ago at agencies where I worked, but even again, speaking to friends, we still used to write retainers at agencies where it was number of pieces of coverage that you would get in a month. So you get a client on you and say, we're going to get you 2 to 4 pieces of coverage per month in these publications. I think the days of that, if not over, are very much limited, because I think what the conversations are showing is that GPs, when they think about how they're coming up in these AI searches, are not as worried about how many publications have covered our news in the past 12 months, but what have they actually said about us? How are our key messages coming through? Is it influencing if someone searches, who are the outperforming mid-market buyout firms? Are we coming up on those lists? So it's very much moved from a quality into a qualities rather than quantity conversation. And I think the other thing just to note is, because these algorithms, these LLMs, are increasingly sophisticated, increasingly good at spotting inaccuracies, I think what AI has also made clear is that inconsistencies are becoming a lot more visible. So if you have one executive going to do an interview on Bloomberg TV and they say, for example, that the firm is technology led, but you have another executive who goes and does an interview with Private Equity International and says, we're a human first business, the AI will really pick up on that. And you probably then get 2 scenarios. One, either you don't come up on the list for technology led private equity firms because the AI spotted that you said something to the contrary, or worse, it might actually flag that as an inconsistency. So another facet of the conversation is there's a lot more strategy around how you approach the media and what you're saying. Because as I said, if you have 100 pieces of coverage across the alternative investment or business media over the past 24 months, but in each piece of coverage, you're saying something slightly different, nowadays you're going to get punished for that far more than you would have done any time, let's say 10 years ago, when there wasn't this vehicle, this vessel to put everything you've said about yourself side by side and then draw conclusions from it.
Yeah, we had Ben Wynn on Raising the Brand, and Ben is VP of Community and Content at First Mark, and he talked about, and I'm paraphrasing now, but really the quality of content, as you said, over the quantity of content and having a unique point of view. And he was arguing that actually having that unique point of view is now more important than ever. And they're doing that through, let's say, the unique data they have access to. Can they turn that into thought leadership rather than just posting a lot of educational content?
I think that's completely right. It's having things that are novel that you can bring to the market. One of the rules I've gone by for many years, and I always like to repeat, is whenever we write something for a manager, particularly on the thought leadership side of things, if you took away the logo of that manager, would it still be interesting? And I think that's a really good way to think about it, particularly in this era of abundance of content coming out. Everyone is able to quickly pull together, probably with the help of AI, a 4 or 5 page white paper or even a short animated video. But that USP, as you've just referenced from your previous conversation, that little nugget of information, something that a journalist could look at very quickly or an LP could look at and say, wow, did you see that so-and-so has heard that, I don't know, 75% of brownfield infrastructure in Europe is underinvested in, and that's a huge opportunity. Those little snippets, and if it's proprietary as well, that's really the difference between getting coverage that just adds to the quantity pile or coverage that adds to the quality pile.
Yeah, it's interesting. As we look at kind of the way you show up when an LP searches in let's say on ChatGPT or Claude, to summarize the top infrastructure managers in Europe, right? Like that model is drawing on all those content pieces. It's drawing on LinkedIn activity. It's drawing on other thought leadership. This might be a very quick answer, an obvious question, but a firm that's been quiet, do they get a thin and inaccurate profile? And is that something that you've been observing along the way?
I think it's not as simple a question as maybe you've suggested there, because I think there's nuance to it, not least because we know the industry that we work in. I think when people consider how you come up in a ChatGPT, Claude search, I think the issue isn't so much that AI will get it wrong if you have a thin profile. It's that it won't necessarily believe what you're saying. And I think that's a really important differentiation, because AI is very much built on trusting sources that it can find about a firm and then drawing a conclusion from that. And I think the challenge to marry for an alternative investment management industry, which has always been based on discretion, isn't necessarily to go out and suddenly flood the AI with different sources about your firm, but it's ensuring that you have enough that it can see that, for example, on your website, you have said XYZ about your strategy, that you conduct deep research into the firms you acquire, that you have an incredibly strong operational backbone in the team, et cetera, and that information is validated not by 100 sources, but perhaps by 3 to 5 sources in the past 12 to 18 months. So what we're talking here is not flooding it. It's about picking and choosing very select media opportunities. Again, going back to that previous question, ensuring when you get that media opportunity or you get that contributed article slot in a paper, that you make the most of that, and you talk about things, not just those that are kind of in vogue and feel like the sexy terms to say in an interview, but things that you've been talking about for a while, things that are reflected on your own channels, on your website, on your LinkedIn, because I think that means if you do that correctly, you will have presented yourself as consistently and as actively as possible to that AI search. Whereas if you go quiet, the risk here is that it won't believe what you've said. I think that's what we're finding. Firms can have an incredibly good and compelling website, and they can say everything they want, and they can even put out, non-stop content on their website, which speaks to their strategy. But I think what we're finding, and there was some interesting research into this from Muckrack, the journalist and media screening platform, where they said that 95% of AI citations come from non-paid media. I think that's incredibly compelling and worth thinking about, that if you want the person sat behind a computer looking up your firm to get a flattering or accurate profile of you, it's not about necessarily going from being an incredibly quiet firm to being an incredibly loud firm, but you do need to have some external validation of what you're saying about yourself on your own channels, or you risk either not coming up or coming up in a manner which doesn't feel punchy enough and with enough conviction.
Yeah, and I suppose that if you think about that, the counter argument, right, is that LPs do their own diligence. They don't rely on AI for manager selection. And how would you respond to that? Is AI influence perception already further into the funnel than people think?
Well, look, I think that's it's a great question, and it's one we get often. I mean, to take that question even further, people will often say kind of, an LP won't allocate to you because ChatGPT told them to. And if they did, they probably won't be a good LP for too long. But I think the importance is what you've alluded to at the end there, is where in the funnel does it drop in? And again, just to point out some research from the brilliant people at AIMA, the Alternative Investment Management Association, they found that approximately 30% of institutional investors have, I think, were using Gen AI questions in their DDQs, and another 30% were planning to add that to their process next year. So I think, look, the trend is very much that AI being used in the process is on the way up. It might not be wholly mainstream at the most formal levels just yet, but I think it would be a fair assumption, and you can probably quote me on this in a couple of years' time, that I think it will become mainstream. But I think the perhaps the more important point here is, yes, an LP won't make a final decision to allocate based on how you come up in AI, but what they will do is create long lists, summarize market maps, prepare meeting notes. You and I were just talking about the Super Return conference in June in Berlin, 4,000, 5,000 attendees, hundreds of meetings. It would be naive, in my opinion, to think that the analyst or junior IR person, or even senior IR person, incredibly stretched senior IR person, or the LP on the other side will not at some point say, right, I've got a meeting with this GP. I don't know that much about them. We're meeting them in an hour. I've got 20 minutes. Do we really think that they're not going to, on some level, ask a Claude or a ChatGPT or whoever just to pull a bit of information? And yes, that's not the final stage of allocation. However, those meetings, we know, very well, can often be the ones that then lead into appearing on the shortlist. Can it lead to the follow-up? Those first impressions can be really critical. Another point is, particularly when it comes to LPs who might be, a little bit more risk averse, running searches on GPs to see if they've ever been caught up in any controversies. Have they had any reputational issues? All of these things come together. And so even if, let's say today, we believe, I would say conservatively, that how you come up in AI plays a 10% role in the overall LP allocation process, that 10%, we know it's a game of fine margins, so it can still play an incredibly important role. And, to bring it back to that first point I made, I think that 10% is going to rise quicker than perhaps many GPs who are still using that sort of 2010 or 2000 even mentality of less is more. I think they will probably have quite a harsh wake-up call at some stage when at least those initial outreaches start to dry up.
Yeah. And AI, of course, also goes now well beyond your ChatGPT and your Claude, right? Like, it's affecting search engines. The first thing you see is a Gemini summary on Google. I'm sure it's going to be affecting the LP databases going forward as well. So the answer will likely evolve over the next months, if not weeks.
Yeah, and it's interesting as well to consider that, as you said, even when you look up on a Google, you now have your top answer is quite often coming up from AI. And I think the other thing is with those answers, the answers are always evolving. I would say that a lot of managers that I work with on the GP side of things, one of their key messages often is that they have had very little style drift in their strategy, which from an investor perspective is compelling, because firms who don't jump between different strategies is generally a positive thing. But what it sometimes means is that they don't feel a need to kind of update their external perception, because the way that Google previously used to work is that the top search findings basically would be your company website, your LinkedIn, and therefore those descriptors would sort of stay valid, even if it was valid 10 years ago or 15 years ago. Whereas the way that AI works is that it pulls in the most recent information about your firm very high up into its descriptor. And so even if you've had no style drift, but you haven't really said anything about it for many years, or worse, you've had some coverage, but maybe some of it hasn't been that flattering, or maybe you've had a portfolio company that's had an issue, that information is getting far more prioritized now than it would have done in a traditional Google search, let's say 5 years ago. And so that means even if your style hasn't drifted, even if you've been doing what you've been doing for many years, it's worth going out and telling people that a bit more proactively, rather than just expecting people to maintain that opinion of you the whole time. Because, as you said, there's no avoiding that perception that AI creates of you, even if you go through, the slightly more old man version of Google.
Yeah, quite right. And we could do a whole separate webcast on this, but it's interesting to think about how it might actually change brand architecture right? Like if you were to acquire a real assets firm and you're a private equity manager, how do you think about branding going forward if it does pull in all the recent information? One thing I wanted to touch on as well was the journalist engagement, right? Kind of think about earned media. And from your conversations with journalists, how do you think they're responding to the evolving role their articles are playing? Is it changing the way they perceive their role as a journalist?
I think that's probably the most fascinating side of this entire conversation, because I think for me, the media has always played a critical role. And if you look at, historically, journalists in, we're talking the 20th century, the articles that they wrote influenced public opinion in a way that few other things did. And if you look at the journey that the journalist sector has taken, one could argue, and this is also coming from conversations I've had with journalist friends of my own, that we went through a period of time where perhaps in the late 2010s, very early 2020s, around the COVID era, I think there were maybe a few question marks, at least amongst, journalist friends of ours, publications that had to switch to digital only, shut down. We've seen all these headlines about what the future of journalism was. But I think, and this really pleases me because I wanted to be a journalist myself when I was younger. It's an industry I really love. I think what's become super clear is that journalists are experiencing a huge surge in industry recognized importance because they have become an increasingly trusted source of validation. And I think what that beds itself in is, if it's easy to create a website, if it's easy to create content, and when I say easy, I mean easy to create an average standard, 4 or 5 out of 10. To create a really good website takes a lot more work. But if you can quickly whip up a Wix website and put out content talking about how you're the most brilliant mid-market manager, that means the other firm can do that too. But what you can't do is convince a journalist, because journalists are incredibly intelligent people. They know their sector, they know their craft really well, and they can also spot someone who is fibbing from a mile off. And so the role of journalists has become incredibly important and is going to become even more important, in my opinion, because when you search a firm online, if they say something about themselves, you can still remain skeptical. If a journalist has said something about them, you can feel more confident in that take. That's not to say that journalists also don't have misunderstandings, or, there will be firms who will have certain grievances with how journalists have painted a story. But generally speaking, across the board, if a journalist has taken the time to research a firm, to speak with them, to write an article, that is a real stamp of validation and credibility. And the important thing here is, it's not just me realizing that, it's not just LPs realizing that, the AIs realize that as well. And so again, going back to that point from the Muckrack research, 89% of AI citations come from earned media. That's a huge proportion of what AIs think about your firm come from earned media. So the role that journalists are playing that is incredibly important, because they are effectively providing information that can then shape how a firm is viewed. The important thing I think to note here is that journalists can't be viewed as, distribution channels for key messages that you want to come up in AI. And it's something that we come up against a lot on agency side. And I'm sure if you spoke with any other agency person, it's very similar, or indeed a head of comms dealing with a CEO who, wants the Financial Times or Bloomberg to write the most perfect headline and the most perfect story. Because in order for journalists to continue to be viewed as a stamp of validation, they have to be viewed as impartial, and they have to be viewed as individuals who can take a view on your firm. So I think a really important thing that we as people in the PR industry need to maintain is real integrity in this, because of course, if you realize that a journalist article is important, not just because it will appear in tomorrow's copy of the FT, but because it will probably appear in search engines for the next 1 to 2 years, it's really natural for a GP to think, okay, well, can they please include this line about our sustainability initiatives, and can they please include this line about our returns, perhaps if they're able to do that from a compliance perspective, or include this line about our technology initiatives. But it's really important to remember that the journalists are here to ultimately serve their readers. And so that relationship side of things is going to be really interesting to watch how that develops, because simultaneously GPs are going to want to appear more and more in media publications, but they are also going to have to learn how to deal with the fact that you cannot control every outcome in that space to the final full stop and comma. And I think that's going to be a really interesting dynamic to look at over the coming, 12 to 18 months.
Yeah, for sure. And if you think about our community, right, our community, the private equity marketeer community, consists of brand builders and capital raisers in the private markets. How should they, let's say you think about a head of marketing or head of investor relations, how should they be thinking about their PR program differently? Does anything change about the brief they used to come to you with?
So I think the way I like to think about it is that the PR brief that a head of marketing or head of IR should put out there should be very much thinking about coverage as infrastructure. And by infrastructure, I mean, what are the different assets out there which help shape your reputation externally? And the single best way to do this is to start by actually doing an AI visibility audit. So if you think about what an LP might sit down and search on a ChatGPT or a Claude, they might search, as you said earlier, top European infrastructure managers or specialist mid-market healthcare investment firms, private debt managers with strong downside protection. One of these things. Whatever applies to your firm, I would say search those prompts, put them in, and see whether you're coming up. If you are coming up, what's it saying about you? If you're not coming up, which peers are coming up, and create an entire image of how is your firm currently being perceived, particularly based on earned media. And then once you've done that, build a plan to plug the gaps. And there is no firm in this world who will not have gaps, because there will be either jurisdictions, as we know very well, it will depend. Often an AI will depend on where you're searching from, what it knows about you, particularly if you've trained the model to understand what your perspective is, who you are. No firm in the world will not have gaps in that. So once you've established those facts, you can really then start to build, as I said, that kind of reputation infrastructure, which will be your assets, your pillars that will support your visibility and your correct visibility over the months and years to come. And I think if I was to sit down with a head of marketing today after doing that exercise, it would very much make sure that we're looking at quality, not coverage, in your firm's perception. It would be selecting, I remember, again, this is years ago, but when we used to work on these quantitative retainer models, where it would be, as a PR agency, we have to get 2 to 4 media cover media articles a month. You look at media lists and it would be 50 names, 60 names, 100 names. But the reality is, I think that's really changed, and it's changed for a while in the sense that we've always been moving towards a quality model. But I think now more than ever, we go into pitches for GPs, present to them a media plan, and actually our media list slide can be quite short. It's 5 to 7 names. It's journalists who really cover what you do, and I think sometimes, in many ways, it can be a shock to those heads of marketing or IR, or particularly when they speak to someone who maybe isn't in the PR and comms universe as CEO, because they'll say, well, why? We want lots of articles. We want 20 articles. We want 30 articles. Another shock sometimes can be they will say, well, it's not worth doing unless it's the FT or Bloomberg. But I think that's another thing to say. The trade publications, I would say, are becoming significantly more important in this, because, again, if you went now and searched on Claude, name me the top 10 private, I don't know, mid-market firms, they would most likely pull on something from a PEI or an IPE or a Real Deals. So again, it's also about figuring out that what the perceived quality of publications is also shifting. So I think in summary, I think understanding that it's about quality, not quantity. I think it's understanding what the gaps are in your current perception, particularly if it's on a competitor related basis, or understanding where you sit versus those peers. And then also understanding that the media targets you're going for may not be the media targets that you would have perhaps prioritized 10 years ago. But actually, if you've done those two previous exercises well, you will understand that it might be 5 to 7 journalists from the trades who will have the most direct impact on how you're coming up.
Yeah, and I have a very quick follow-on question. There's a very famous phrase in the industry, which is people invest in people, right? And if you think about executive visibility, you see more GPs putting partners on stages, right? In podcasts, in the press, when you go to Superturn Berlin, as you mentioned earlier. How does that interact with the AI dynamic? Do you think well-profiled partners or individuals can create a stronger signal in that model's training data?
It's a great question. I think, as you said, private markets is fundamentally a people's business. So having your leadership showcase themselves positively can only be beneficial to how your firm comes up in the models. If you, again, ask for a description, an overview of a GP, it will bring in information about the leadership team. If the leadership team has been active, has appeared in the media, have an active digital profile, generally speaking, that will be flagged. I think the risk here is you really need to make sure that your leadership visibility is strategic rather than performative. And I think that's an important note to make when it comes to, going too front-footed again, because going back to a previous point we discussed, which is about consistency and inconsistency, if you have a CEO of a GP who has decided, he or she has decided that they want to go out and almost sort of be the star of the show, appear on loads of panels, appear on TV the whole time, but what they're saying isn't really additive to what your firm is doing, again, that can have a negative impact on how your firm comes up, because an LLM, a Claude or a ChatGPT will be taking a holistic view of the firm. And again, if your member of the leadership team is on CNBC saying one thing about either the business's approach or is speaking about their past successes as an individual without mentioning the firm, or something else that doesn't feel kind of connected to the brand or additive to the brand's core messaging, the LLM will pick up on that, and it will either perhaps then not mention that team member when doing an overview of the firm, or again, worse, may mention that there's an inconsistency there. So I think yes to leadership visibility, because that's the industry we work in. There are people, and ultimately people underwrite the best kind of judgment, discipline, repeatability. However, do it with purpose. Go out and speak about things that are beneficial to the firm. Don't become a key messages robots and just keep repeating the firm's top 3 lines, but do it in a manner which is additive rather than just performative, because the machine is sophisticated. It will pick up on messages which are accurate, but ultimately it will punish you if what you're doing is just words rather than strategic or key messaging.
Yeah, it's so interesting. One of my first mentors in my career taught me the phrase, if you have nothing to say, say nothing. And if you have something to say, say nothing. And it's interesting to kind of see how that's being affected at the moment by this renaissance. Yeah.
I think also just a quick note as well, it also comes down to, media training for executives. Again, this touches on a lot of points that we've made, but what you say now and what appears in the media will have a lasting impact for probably far longer than previous articles would have done, which would have, if you said something in a media interview in the 80s, it appeared in the paper, then what's the saying? The next day, it's fish and chip paper. But nowadays, if you say something that's off and it's on the record, so something that's off but it's on the record, and a journalist is within their rights to run it, you may then have to deal with the consequences of what you've said there for a long period of time. So again, coming in prepared to navigate difficult questions, understanding that if a meeting is on the record, you have to be particularly careful in how you phrase things is really, really important, because executive visibility can have so much upside. But if you have an executive who goes in unprepared, not ready to deal with the tough questions or naive to that, you'll really feel the sting of that error of preparation in the months and years to come.
So practical last question, right? If a marketing or investor relations leader watching this takes one action away from our conversation to improve how their firm shows up in AI, what would that be?
I think I'll go back to a previous recommendation, which is running a practical AI visibility audit. I think about what your stakeholder universe is. That can be LPs, that can be target portfolio companies, that can be consultants, that can be journalists, and think about the top 5 questions that they would ask a Claude or a Chat GPT, and then run that. Run that on yourself, run that on the sector that you operate in, perhaps run that on your competitor and say, name me 5 competitors of one of your competitor, and see if you come up on that list, and draw up a universe of action and what you can do to plug those holes. Because ultimately, if you continue on the path that, has been historically probably the most common in the industry, which is staying relatively quiet, communicating around fundraising announcements, acquisitions, but not thinking too much about the in-between, or not thinking too much about the words with which you communicate about your firm. As those stats go up of the prevalence of AI in the due diligence or screening process, you will start falling behind more and more when it comes to appearing on those long lists, when it comes to having a favorable portrayal when the analyst does the first screening of any reputational issues. And so I would say run that audit, see what the gaps are, speak to your team, speak to an agency, speak to an AI expert, and start taking action on that now before you need to do a new fund launch or you're going to have a leadership change. Because I think if you do that infrastructure that we mentioned, it will be in place, and then you can make that a quarterly discipline, or a half annual discipline where you repeat that process over and over again, and you're both safeguarded and proactively positioned to have as successful a future as you can.
Yeah, that's great. And I think there's so much opportunity in that. And we've never published this tool, but we built a tool where we ran the same prompt every week for something like, which manager should I pay attention to that's focused on strategy X? And the same managers came up time and time again, but then when we started making it a little bit more specific, right? Think about which emerging managers should I be spending my time on, or should I pay attention to? That's when we started seeing, some unique names that, if you capitalize on that early, I think there's huge opportunity. Good, Alex, thank you so much for sharing your perspective. And thanks to everyone watching. Where can they best reach you and Peregrine?
So you can reach myself via email, ag@peregrinecommunications.com. If you have any questions, LinkedIn, I'm always active there. So yeah, John, it's been an absolute pleasure. I think what you've been doing with your platform and continuing to evolve it, I think really reflects what's been evolving in the private markets industry across the board. So it's been a pleasure to speak with you, and thank you very much to everyone for listening in. It's been a great conversation, and I think if we had the same conversation in 12 months' time, it will be a very different one. So thanks very much.
Well, let's do it, and we'll see you at the next Private Equity Marketeer webinar. Thanks again.